So I mentioned institutional level selling by way of that B of A note. The committee level, there's selling here on this desk. Brian Belski sold Nike, Prologis, and Restaurant Brands. Those are large cap stocks. Why'd you do that?
Well, Restaurant Brands was a name that we own in a lot of Canadian portfolios, so it didn't make sense to own in our U.S. value much. It didn't really work the way that we wanted it to work. We had a nice bounce in it, but we didn't see it. Nike had the big bounce. We talked about it when we were here the last time. We knew that it was up for selling, but we obviously couldn't talk about that until we published that. We replaced it with Lululemon because we think Lulu, from an opportunistic standpoint, makes a lot more sense. And we sold Prologis because we want to get a little bit bigger, Scott, in the OG utility names like Southern and Nextera, because we think those are better plays than REITs right here. So that's why we sold what we sold.
So as it relates to Nike and Lulu, so you think that the bounce back in Nike shares, which has been pretty dramatic.
Yep.
There's still a long way to go, obviously,
yep.
as you debate whether the turnaround is going to take shape or not. There you can see at the very end of your screen there the move I'm talking about. So you think that's kind of done, and then if you show Lulu maybe year to date, you think the worst is in.
I do.
We don't need an intraday on that.
Yeah, look at that. I mean, if you look at that chart in the turn here from the bottom at 15 times earnings and a growth stock that's a broken growth stock, you want to try to find broken growth names in a value name.